I'm Eric Fuchs, Senior Contributing Analyst at The Street, and they just don't get it. We're here today to talk to you about how timing is everything in life, especially when it comes to leaks about JP Morgan in the run-up to what will be high-profile congressional testimony to the Senate Banking Committee tomorrow. And the Senate Banking Committee, well, they're already sharpening their knives. So the Wall Street Journal ran this big story. JP Morgan knew of risks. Now, the Journal gathered access to a really notable number of high-placed sources in the Chief Investment Office where a bunch of the problems happened. Moreover, they started talking about losses that could reach upwards of $5 billion when the number commonly tracked around had been, well, about $2 billion had been the favorite. Now, the Journal waited, and this is really important, to nearly halfway down to mention about tomorrow's testimony when CEO Jamie Dimon will get grilled and piled on. But they didn't relate the two, and they should have, because you understand, or helps you understand, how companies work and gives you kind of assurances that finally we're getting to the bottom of this rancid trade story. Look, JP Morgan has a challenge on its hands. Obviously, there was systemic trouble, there was sloppiness, they did horribly, and now on live TV, they're going to go in front of some preening gas bag politicians in an environment where Wall Street is about as unpopular as, well, metaphors fail me. So what they wanted to do is get all the bad news out there. They didn't want any of it to break in Washington, right? So they're hoping they take the hit today and less of the hit tomorrow. Also, one of our hesitations with JP Morgan has been, obviously, there's bad news out there. This wasn't just a rogue trade. This was a matter of systemic risk. And now we're starting to see that. Also, that $2 billion number was pure fiction. And we're starting to see that too. So we know that when pushed, JP Morgan will leak out the bad information. And here's what else we need to know. Number one, a lot of people at JP Morgan are talking to the Wall Street Journal. Number two, the Journal doesn't tell you why they spoke now. Number three, they're clearing the deck, getting the bad news out today so it won't break in Washington tomorrow. This means finally we're getting to the bottom of the rancid trade story. And also tomorrow might be a little bit easier than expected because today is a tougher day. If you disagree with me, and you won't, feel free to email me at marek.fuchs@thestreet.com. And remember, they just don't get it.
This market is fueled
Stock tickers market.
Stocks have rallied this year.
We're coming into a Monday where we're going